Well, hello again. This is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Today we wanted to follow up on more topics that clients have requested. Again, Robert, what's the playbook? What are you guys looking at as we go through this bottoming process in the markets? So I'm going to walk through 5 short-term, meaning the next weeks and months ahead, and 5 long-term indications, meaning data points that are in our playbook on our dashboard and looking for in our morning and daily research that are long-term in nature. So let's get right into it. Well, the 5 short-term daily and weekly indicators that we have on our daily watch list, us as Blanke Schein Wealth Management on our team, our investment committee, and just constant real time, and things that actually matter to, 1, our clients' portfolios, but 2, the economics as we go through this economic recovery. What's important. So let's get right to it. Number 1 indication, and this is kind of interesting to note, we're taking a look at copper. Copper is, if we go back to the most recent Great Recession, that bottomed, copper, the commodity actually bottomed in the late December, early January phases, actually December 26th in 2008, 3 months prior to the S&P 500 on March 9th actually bottoming and setting the ultimate bottom for the Great Recession. Again, we are seeing some signs, some indications that copper right now has turned positive, but all bets are off right now. We're in a different world, but we're just going to put copper on the top of the of our leadership dashboard of what we're looking at from our playbook standpoint, because it has been a quality indicator in all previous sort of bear market recoveries. Next thing is oil. As I mentioned day before yesterday, President Trump and the administration have some ability to, 1, hopefully bring some OPEC powers to be from Russia to Saudi Arabia at the table. Maybe they can have a truce and talk about stabilization in the oil markets. Plus, he's also bringing in the oil executives and talking about what they need on a financial side. Maybe some support on a short term. But oil stability, the actual commodity itself, is another key indicator that we're going to watch. We had a rally this week in oil, but we'll see if it lasts. So keep that on the top of the mind. Again, I keep talking about the number 3 is the yield curve. So that's all treasury markets, so 10-year treasury, 2s, 5s, 10s, and 30s in the spectrum that we're watching as it relates to all of the Federal Reserve liquidity and as it works its way into the system. Again, we had a lot of volatility in the bond market, in the credit markets over the last couple of weeks. But as the Federal Reserve continues to basically throw everything at this in hopes to, 1, stem the tide, and 2, ultimately put us on course for an economic recovery, they have to work on the credit markets, and that's what they're doing, just that. So keep that, we're keeping that on our target list. And then the financial conditions index. There's a financial conditions index that we follow to basically show, 1, the VIX, which is volatility, and a couple other factors all into one to show sort of the sentiment that's out there, and watch that heal over weeks to come. And again, with number 5 is credit spreads. Again, credit spreads in the high yield market. That's always the concern as we go through any type of bear market or any type of market pullback. You go directly to the high yield markets, those that actually are probably not the best credit quality, if you will. So if you're a consumer, think low credit rating, type of consumer. If you're a corporation, that's called high yield or junk bond market. Sort of same sort of analogy in that world. So we want to take a look at the credit spreads so they don't continue to widen, meaning high yield yields or continue to go up over treasuries. Treasuries are risk-free rate of return for the most part, as an indication of markets and credit spreads. So that seems to be stabilizing from the last couple of weeks, but we're going to keep an eye on that. So that's our short-term next couple of days and weeks to come that we want to keep an eye on. Well, I just went through the 5 short-term indicators that we're keeping an eye on. Here are 5 long-term indicators, meaning in the weeks and months ahead. And number 1 is the mortgage refi activity. Well, interest rates are at an all-time low. What we'd like to see is that the mortgage market, the credit markets out there, the lenders have the ability to process these refi opportunities. The valuations hold up, and that it's ultimately a relief for the consumer. Again, if you haven't looked at your mortgage lately, you might want to look at a refi opportunity. If you need a recommendation, please contact us at Blanke Schein Wealth Management. We'll point you in the right direction. Number two is unemployment claims. We know that last week and then this week, all-time highs on the unemployment side. That's not going to be a surprise. In fact, we expect that to even have a bigger number next week. But hopefully the small business SBA loans that through the CARES Act that the government just put into law as a relief to stem the tide of unemployment, that what that ultimately does, take home point there, is it incentivizes the business owner to apply for the government assistance, which ultimately becomes a grant to retain your employees. So that hopefully we will see a stem of that tide in the next weeks to come of unemployment claims. So the incentive is a small business owner, retain your employees, because you don't want to just let somebody go for 2 weeks or 2 months, and then 4 months later you're back in the same spot again by having to rehire those same employees. So that the unemployment claims are what they are, but I think the government has already stepped in with some of the assistance programs. We'll see how they play out. School closings in California. School's out for the summer. That's welcome news in the Schein household, as our little ones are super excited about that. But we're still going. School is continuing in our house. We have 2 at Xavier and 2 at Sacred Heart. So those kids are still working away on a daily basis, and those schools actually have done an excellent job of haven't missed a day of school on both sides. And their educators have done a great job. So shout out to the leadership team on both those schools. So the final 2 long-term indicators that will have an effect on the economy in the weeks and months and even years ahead. Number 4 is corporate travel. As we're all living in this new world, the teleconferencing, the Zoom world, it's really going to change and bend the curve of corporate travel. I think all of us have learned that we can adapt to different situations. And in fact, anyone who travels from the West Coast, from corporate travel to East Coast, like I do for Chicago to go back to HighTower Corporate, it's 2 full days of travel there, travel back, and then 1 day of meetings. So that's a full 3 days out of my day, where if I could just Zoom maybe 3 or 4 meetings on over this course of 3 days, back to back to back, and still hopefully have the same impact, that saves a lot of time and money. So that net effect is going to happen across corporate America. People are going to rethink the travel that's necessary, and then they're going to go from there. So that could have a long-term impact on earnings, the travel world. So that's a long-term view of let's just keep an eye on it, see how, if we go back to normal or if things change. But it's something on our dashboard for certain, as it's changed behavior long-term. And number 5, corporate guidance. Well, if you're like me, corporate guidance, the thing that I want to see from corporations right now is not so much trying to make a profit in the second quarter of 2020. We all know that is absolutely an anomaly, and it can't be compared to anything that's been done before. But what can be done is, I think a lot of corporations are stepping up to the plate on the consumer side, which is helping consumers in every aspect, from payment relief on mortgages to cars to credit cards, as well as putting employees first. That's the most important thing right now. Corporate guidance will come back when we have an indication of what earnings look like, but this is a human health crisis. So it's a wartime act, as the president has really deemed and indicated, and all of us band together. One, stay home and do your fair share so our medical professionals can do their fair share, and they're doing a wonderful job. So again, thanks and thoughts and prayers for everyone there. So that's it. Those are the 5 short-term and 5 long-term indications. As clients have asked us, hey, what's on your dashboard? What are you guys thinking? And what's important to you as we navigate through this process? We appreciate it. If you have any other questions, thoughts, concerns, please shout out to Blanke Schein Wealth Management. And thanks for listening.